Welcome to the Rise of Cryptocurrency show, the digital money show at wealthresearchgroup.com. In the last month, we've had on some very important commentators, economists, investors from all sorts and all walks of life, actually. We had David Stockman from who used to be, and you love this, Dave, used to be the budget officer for Ronald Reagan administration. He talked about getting out of the markets completely. This is a false economy, false boom. We had resource legend Rick Rule, who talked about putting precious metal storage on the blockchain. It's a new service from Sprott that's called tradingwinds.com. And we had 87-year-old Bob Moriarty, a great guy, veteran of the markets, actually bought gold for the first time in 1969, if I'm not mistaken, really veteran of the gold sector. And obviously, Jim Rogers, who came to Wall Street with like $500 in 1968 and left Wall Street, retired in 1980 and started enjoying the world in 1980. Great guy, just a very brutal honesty type of person, talks about how all bubbles end with tears and disaster. And today, you know, this is a session. So what I love about today is that this is going to be me asking questions of Dave Levine. I'll introduce him real quick to everyone. He's an entrepreneur, an investor. He took a company to $150 million in sales as CEO. He founded the company, not only ran it, but started from the ground up. What I love about him is that he's now focused on teaching a course to how to make money for kids, which I love because I think in the new economy, kids can do online businesses and home-based businesses at all times. And what I really want kids to learn, including my own children, is how to save money, because I haven't seen a lot of kids save money. And luckily for me, my father went bankrupt when I was 13, which taught me the lesson of saving for myself. So Dave, this interview is going to be a very interesting one for everyone involved, because you're an expert on the crypto markets. I do what I can in the traditional markets, and we're going to go back and forth with questions. I'm going to ask you crypto questions. I assume you're going to ask me some questions about traditional markets, but this is going to be an all-around very nice interview and a lot of value for everyone that does either crypto, traditional, or both. With that said, Dave, thank you very much for taking the time today.
Thank you. Very nice. One quick thing, the $150 million in sales was the grand total with me as CEO. We never had a $150 million a year, unfortunately.
Wow.
And
potatoes.
Jim Rogers, I used to love him. Like when I watched the Financial Network 20 years ago, he was so innovative, and I was, I'm a bit of a fan from the old days.
Well, great guy, and obviously, what is important about his story is that he took the time to retire, and retire early, which is something I'm big on, and then enjoy the world. So one of his first books that I love is actually called Adventure Capitalist instead of Venture Capitalist. It's him on a motorcycle circling the globe. And he actually got Mercedes to do a hybrid car for him. You got to Google that thing, and he went around the world with it with his. I think she's now his wife. Used to be his girlfriend. Anyways, love the combination between thrills, business, and just living life to the fullest. And I want to ask you about another Wall Street legend, for good or worse, Jamie Dimon. So CEO of JP Morgan Chase, the biggest bank in the world in America, in terms of assets, and just an all-around incredibly large bank. And we all know 2017, Jamie says, Bitcoin is a fraud. My daughter, she's being foolish. She makes money at this, and now she thinks she's a genius. Then he flips and says, not even flips. He just sort of moderates it by saying, hey, blockchain is amazing. Just that Bitcoin, I don't see the angle with it, because governments can ban it or outlaw it, and it goes away. The technology is phenomenal, etc. And then apologizes, goes back and forth, but says, if anybody in my firm trades cryptos, I'm gonna sack him. When on the flip side, we know all of his London traders were trading crypto from the very beginning. So now they came out with JP Morgan coin, the JPM coin. Lots of news over that. Dave, what do you make of this entire thing? Because this is part of a bigger trend where Wall Street is getting into cryptocurrencies. We saw ICE, an international exchange, owns the New York Stock Exchange, owns the NASDAQ, etc. Getting into and about to launch Bucked. Fidelity, we all know the CEO is a very big crypto guy. We got the CBOE trying to do the futures. We can already short Bitcoin, etc. What is all of this institutional money that is coming into crypto telling you, and what is the JP Morgan coin telling you?
So there is a lot going on in crypto, and people who say, oh, there's nothing happening and nobody uses it, there's an incredible amount going on. But one of the areas where there's a lot of excitement is, people call them stable coins. I call them dollar pegged tokens because you can peg it to anything. There are tokens pegged to the dollar, and there's like hundreds of them. So JP Morgan is another one entering the field. They have, it's a big bank with a lot of bank connections, and they're introducing a dollar. I don't even know exactly what it is, but I assume it's a dollar pegged token that they want to exchange around. They'll get some market share. I'm sure it's JP Morgan. Will they, own that market? I don't know. There's also DAI, if you've ever heard of that, which is based. I won't get into all of them, but there are a lot. And Facebook is coming out with a coin, right? That might be pegged. There's rumors that it's to a basket of stable, fiat currencies or who knows what. So there is a lot of competition out there. Now, JP Morgan saying Bitcoin is I don't think he said, if he said it can be, the government would try to stop Bitcoin.
Yeah.
The thing about Bitcoin is it can't be stopped by the government. Right. JP Morgan coin, there's other, USDC coin. These written within the code is we can take it away from you, right? Bitcoin cannot be stopped, and that's what scares some people. But Bitcoin has its own problems and may or may not be. Bitcoin gets into another story, but I don't think Bitcoin is a competitor to JP Morgan. JP Morgan is a dollar peg coin. Within that area, it's competing.
Yeah, definitely. And you know what? It's a private blockchain. They're going to use it within the bank or for their own purposes. And so, it's definitely not
What's also interesting about it is it's built on a fork of Ethereum. So they have a private network based on Ethereum code. And another theory is that in the future, in a few years, they then make it so that they can communicate directly with Ethereum, that it connects directly to Ethereum.
Yeah, that interconnectability is a huge part of the future for all cryptocurrencies. The direct conversion between them without exchanges, etc., is going to be big, linking all these blockchains together. And I want to ask you about a big event historically, Dave. I know you've been around in the crypto market since the really early beginning. Halving. So halving, halving, basically the everything that has to do with the hash rate. Can you talk about this? Because historically, if you would position every time there was a halving event, you'd made a bundle of money. And I want to ask you about was this a coincidence? Is it repeatable, or is now that everybody knows about it, is it already priced in? How do you see this entire halving?
So just to explain, because I don't think everyone understands what the halvening is, if you can even pronounce it. Yeah. So, there will only be 21 million Bitcoins. That is the gospel. And how do we get there? They were issuing, so many per block. And then at some point it gets cut, the issuance rate gets cut in half. And then it cut in half again. This, sometime in 2020, it's going to be cut in half again. And it's every 4 years until it does this little asymptote. So anyways, if the supply, that amount new that gets printed, is suddenly reduced by half, and if token economics is about anything, it's supply versus demand determines the price. Okay. So all of a sudden you have less supply, that should make the price go up. Gotcha. But people see it coming. Talk about monetary policy openness, right? We know the monetary schedule for the next 100 years. So. Right. We know it's coming. So on the other hand, maybe it shouldn't make the price go up because everyone should know ahead of time. I don't have an answer, and Bitcoin's mostly gone up all the time anyway. So yeah, it went up around the halvening. Well, went up after halvenings, and Yeah, so that's true. Who knows? But it's very important, and that's one of the things I had to share screen. I wanted to show you this if I can.
Definitely.
Because really, what this is about is the the speed of issuance. What is the issuance rate, is we call it. So
Okay.
this here, the blue one is Ethereum. The orange one is Bitcoin. This is someone from Ethereum because people complain. Everybody loves the Bitcoin game theory is it's simple. There's only going to be 21 million and here's the schedule and it can't be changed.
Okay.
Whereas Ethereum is openly saying, well, eventually we're going to eventually figure it out. And so Bitcoin people, they're going to print. But anyways, this was the last happening. So this is about how many.
Funny that you call it printing when it's mining, obviously.
Right.
Yeah.
Right. Printing. Right. Same. The Federal Reserve doesn't print anything either. Right.
I know. Yeah. They don't even mind.
It's a lot easier to create the Fed to create new digits than it is for Bitcoin. Right.
Yeah.
But anyways, so they are, printing tokens at the printing press. And so the amount drops. So this is good for, now Ethereum just had an upgrade to Constantinople, which dropped its issuance rate.
Okay.
But I think what's really interesting to me is, okay, so to me, these are both reasonable issuance rates. Oh, well, so Bitcoin's going to drop again, and that's good. But the other side of the coin is demand. And one thing Ethereum has going on is people locking up Ethereum as value to back other contracts.
Okay.
For example, there's MakerDAO has in 1 year locked up $250 million worth of Ethereum collateral. And people, that's where another dollar peg token DAI comes from, by borrowing against the Ethereum.
Gotcha.
Anyways, Ethereum has locked up, just from MakerDAO, 2% of this total supply of Ethereum.
Okay.
So in other words, if the issuance rate is 4%, but they're locking up 2, 4, or 10%, the lockup rate is maybe even more important than the issuance rate, especially once these issuance rates get down where as low they are. The other thing with Bitcoin, remember, the more you cut something in half, the smaller that half becomes, and eventually has less of an impact. So when I don't know about the halvening in 2011 or whenever, it was probably felt much more intensely because it was such, it was like you're getting thousands of Bitcoin per every. I don't know. But anyways, the numbers, the supply demand curve looks very good for Bitcoin and Ethereum.
Understood. Now, I want to ask you next about Wall Street wanting to be second. So obviously, what Wall Street loves is to wait a little bit, let other people do their machetes in the jungle, move all of the forestry, and then when you hit the highway, then they want to rule the game. And it looks like that's what they're trying to do now. Obviously, they've waited for Bitcoin to go down from 20,000 to around 3,000, 3,500. Now it's about 4,000 as we're doing this interview. 35 million people currently use Bitcoin. With everything that's being proposed on the blockchain this year, with the adoption of Wall Street, we're looking at a situation where it could be around 500 million people that have that can buy Bitcoin in their brokerage account, just as they buy a Microsoft share or whatever else. So just that exposure, that liquidity, that aspect that it's in their logging, and they don't have to open another exchange account or anything that's foreign to them, is important. And it's obviously it lowers the restrictions and the barrier of entry and the ease of entry. I want to ask you, how important do you think this move in terms of liquidity, in terms of price? You talked about supply and demand. This is going to be a lot of demand coming in. Where do you see this? And then kind of a secondary question to that. A lot of these whales that hold the biggest wallets, they came in at $20 Bitcoin, $40 Bitcoin, etc. They can really take profits even at $1,000 Bitcoin. So because the price started so low, so a company that goes public the CEO doesn't say, hey, let's start at a penny and see what happens. They try to evaluate the company as much as they can to the upside, actually, not to the downside. So can you talk a little bit about this aspect of concentrated wallets within the whales, and then the entrance of Wall Street, what it all means in your book?
Well, I'd rather start with the Wall Street part. It seems easier to explain it. So, New York Stock Exchange building this backed to sell physical Bitcoin, not paper like the CME gives you cash in dollars. buying actual Bitcoin. Fidelity is already buying Bitcoin. And so a lot of the pipes are being built for Wall Street to come in. But we're talking real, there's some funds and there's things happening, that you might call Wall Street. But the big Wall Street money that people are talking about, that's not here yet. And that's the one that people say is going to be second. And once I realized that, I was like, shoot, well, then what's going to be first? Because I thought this rally, and I'm sure what fuels the next bubble run is FOMO on Wall Street. But somebody has to get it rolling first. And so that leads to another point. But where does it get rolling? And I have thoughts on that. But regarding whales is sort of, it's just, everything, like I said, it comes down to supply and demand. I mean, that's why markets go up and then they come down, because it goes up and all of a sudden a bunch of people say, that rings my bell. I'll sell some. And then it goes up and down. And that's why, and a lot of moves in Bitcoin, the moves up are violent, or in all these cryptocurrencies. What I found is interesting, in traditional markets, they go up, and what do they say? Up an escalator and down in an elevator. In crypto, what we've seen a lot so far is it goes up an elevator and down an escalator. Like the moves up are like, whoa, did that just happen? So the whales are, there's people who hold a lot that may or may not sell. Bitcoin people are pretty religious about never selling,
But somebody has to sell for somebody else to buy, so yeah.
Yeah, I mean, listen, I got a price. So I'm, I don't know, what's it to be? He's like, oh, I heard Bitcoin's going to go to 200,000. I'm like, well, if the parabolic, if it continues, that's 10x from the last high. That's usually what happens. So I don't know. He's like, if it goes to 200,000, are you going to party? I'm like, no, I'm going to sell it.
Definitely. I mean, there's a proper price for everything, and obviously, you can be religious about something until it comes to the price. I want to ask you about the Lightning Network, but before we dive into that, how do you view cryptocurrencies and Bitcoin in particular? Do you see them as an investment opportunity? Do you see them as buying a piece of the technology, of the protocol, and basically owning like the new internet? And do you see a way for cash flow to actually be generated using this? Because historically, 45% of the gains in the stock market, going back to the 1800s, has been from dividends, has been from the profits being distributed to the shareholders. And obviously, cryptocurrencies are currencies. You hold them. They don't create a dividend. They don't create a profit. But some of these altcoins, they're basically companies. They're little startup companies that if they work, they will generate revenue and they will be able to generate profits and maybe distribute it. Do you look at Bitcoin and say, okay, I will compare it to the dollar, or I will compare it to gold, or I will compare it to another non-producing asset, and not to a dividend-paying company or to a residential real estate investment, etc.? What's the benchmark for you?
So, yeah, first of all, it's a new asset class. So it is not stocks, right? It's a new asset class. So stocks, the shareholders own and they get a percentage of the profits. That's how it works. Sure. And I once was discussing someone with crypto assets, and he kept saying, where's the cash flow? Where's that? I'm like, there's no cash flow. Like that is part of the corporate, the corporation's not going away, right? Yeah. It's been here since 1600s, and the dividends were being paid since they invented it with the India Shipping Company or whatever it was. So, that's not going away. This is different though. Now you may own equity in a company that's making money as a corporation in the, crypto space. But if you're talking about owning a token, it's a different asset class, and how it works, we don't really know. Everyone's coming out. It's like, imagine in the 1600s, and you're like, well, what is this? I'm going to invest in this boat. What do you think I should pay? And then people are like, oh, you should use price to earnings ratio. It's like, the what? Whatever, even, know. So now they're coming up with these models. So what was the question?
What is the measuring stick for you? How can you say, hey, I had a great year or I had a lousy year?
Well,
Obviously, in the stock
at the
market.
end of the right at the end of the day, I mean, it's just from my point of view. So investing. So there's two things to measure: is this a good crypto to buy, or is that one and its valuation, or there's my own sort of performance to which I could look at all my crypto and convert it into a dollar amount. And if it's going up every year, it's going well. But it's also, I think it's a little venture capital type investing in that I think you buy something and you're waiting 5 years and you've either made a lot of money or it sucked, went to zero.
Gotcha. Yeah.
That sort of thing. That's how I view it. So I think I'm doing well, especially for where we're at in the cycle here.
Did you ever short any of the coins?
Nah, I don't play that game. Obviously, whatever. Obviously, it was good down for a year. You could have made a lot of money shorting. But I do some. The only thing I've done is things that go up a ton, rebalance my portfolio. So I trade out of things into others based on balancing.
Okay.
And I didn't. There's a number of reasons I didn't, run to dollars at the high. I knew it was going down. I ran to Bitcoin more. But anyways, shoot. I was getting to a point. What I lost the question again.
The measuring stick.
Okay.
Yeah.
So the measuring for me is right. How am I having dollars? But the bigger question is, how do you measure what is Bitcoin worth? What is Ethereum worth? What is?
Well, isn't that the big question? Isn't that the biggest question?
Right. So something like an interesting one to look at, and one of the ones that could be first, where Wall Street is second, is Binance, largest exchange in the world, like 50% market share. The guy who runs it's a genius. Looks like one of these Steve Jobs, Elon Musk thing.
Okay.
They have a token. It started as it's a discount, a good discount when you place trades on Binance.
Okay.
Okay, so it's a utility token. Mm-hmm. Well, profits from Binance I used to burn existing tokens, reducing the supply based on profits.
Okay.
Sounds like a dividend. Not a dividend, but it's from the cash flow that's helping the token. Okay, so it's a security token. Well, because you're using it for that, you hold it. Oh, and then he's launching a decentralized exchange where you stake your tokens on the validators to run the decentralized exchange. So that sounds like, a staking model. But the point is, this one token has so many use cases, and they're using it, giving to charity around the world in their token, which helps spread the distribution and is a cool way to do charity. So looking at there's so many things that drive the price in a token, and the most important being basically if the ecosystem keeps getting bigger and the number of tokens stays the same and the token is used to run the ecosystem, the ecosystem's getting bigger, then the value per token goes up. And that's the main thing that we look at. But you also got to pay attention to the trends, right? When you want to be buying when it's 80% off the highs. You can feel a little bit more comfortable. If the whole thing's going to zero, you shouldn't be in it anyways. If you believe in something, you want to buy it when it's 80% down. And when everybody's calling, and your parents are calling you and they want to get in, like that's when you start selling. I don't sell it to your parents, but
Yeah, that's funny.
That's what I'm going to do next time when my mother calls me, because that's the ringing the bell. I'll say, Ma, I guess what? You can buy all of mine.
The mother indicator. Yeah, that is incredible. I want to give you a platform because I know that you have questions that you wanted to kind of poke my brain with regards to traditional markets. So, I guess the floor is yours to do that if you want.
Yeah, and how are we doing for time? I know you said you wanted, you usually do 30.
We're good on time right now. Yeah, definitely.
Okay. I forgot what time we started. All right. So first thing with the financial literacy, you said, you love that I do that. I mean, sorry to go off crypto topic a little, but
yeah.
I think, I looked at your bio. There's something you started, I guess, when you were 16. You have an idea of retiring by 40, and you want to put these out. What are you doing regarding financial literacy? Or is that what your channel's about, or what are you doing to push financial literacy for kids or for
what happened to me, Dave, is that when I was 13, my father had a big bankruptcy in his business, and that kind of a time point when you want to have your first girlfriend and you want to start buying stuff for yourself, and you have a life of your own at 13, and then the hose is shut on you. Actually, it's sometimes you get to the house, there's no electricity for a few hours, or there's no phone and all that. It's not fun, but it's also it puts a lot of responsibility on you. So I immediately said, okay, I gotta get a job. And so I'm at that point in feet, I'm about 4'1", or if I'm not mistaken, or in centimeters, I'm like 1 meter 45, very short guy at 13. Now I'm like 6'3", but this is early days. So I go to this clothing store and I pitch myself for 2 weeks. Every day I come in for 2 hours. I show the owner that I know everything about these brands, and I go home every day. I read about them, etc. And one time this lady comes into the store and I upsell her just by being there, and I talk to her about the brands and everything like that. Says, you're hired. $4 an hour, 1997. This is the beginning of the accumulation phase. Now, that gave me a lot of confidence. I started babysitting in my neighborhood, coaching basketball to the first-year-olds. I was like an 8-year-old, an 8th grader, I'm sorry, to the first graders. And then at 16, I have like this little nest egg, this $20,000 in today's money, saved up in a bank account. And the banker says, if you get a waiver from your parents to start investing as a minor, I can show you mutual funds. Now, this is 3 months after the dot-com bubble burst. So a great time to enter the markets, like you say.
Wow.
Yeah.
Well, that was funny. I saw it because in your bio, you started real estate in 2009. Well, I guess it would have been better in 2001, but still good. You got good timing. Is that by luck or by smart?
Yeah. So here's the crazy story about this. So my grandfather gives me 2 books. I'm 16. He gives me a Peter Lynch book, a Warren Buffett book. Peter Lynch, greatest investor of the 80s. He talks about his teenage daughter. Now, I'm a teenager at that point. I'm 16. He says, my teenage daughter, she brought me my biggest winners. So I'm like, okay, well, that's doable. He says, if you can't understand the company she's pitching to you in 30 seconds, don't be there. So that gave me the understanding that you need to invest in things you know. And Buffett's book is all about brands. Invest in brands. Invest in companies that have a lot of loyalty from their customers, a lot of competitive advantages that is intangible, the relationships, the reputation. So combining both, I started investing in clothing companies because that's what I knew from the clothing store. And I looked at the brands. So I went to the largest apparel manufacturer in the world. Nobody knows its real name. Nobody that is outside of the clothing world, but people know the brands because it's like a holding company that has a lot of brands under it, like Wrangler and Lee and Timberland. They're all owned by the same company, North Face, etc. So, anyways, a few years later, I'm at the Grand Canyon, the Green River part of the Grand Canyon, river rafting, September of 2008, Dave, for 4 days, no cell reception. I come out of that, and it's the Lehman weekend. So I'm like, what happened? What happened in this weekend? What happened? My portfolio, everything is down insanely. And what happened? Because you come into, there was nothing, and then there was a meltdown. And one of the things that happened was that I was already in the U.S. So I was in Colorado. This is the end of 2000, the end of the Lehman Brothers moment, and real estate is insanely cheap. Historically, I was already looking into real estate because this was like my favorite way to generate passive income. And there at no point in the history of the United States was there a nationwide opportunity, like all markets going down simultaneously, no matter what the fundamentals, etc. And so,
but how are you liquidity wise? Like you got into stocks too. You said in 2001, which is a great time.
Yeah.
But were you already pulling some out when the stock market went down? It was good to get into real estate because it went down. But were you in the market before it went down, or were you selling some already, or how were you positioned?
So I didn't convert anything. I didn't sell Nothing. Because I wasn't part of the panic, that Lehman weekend, I was out of touch with the world, just river rafting in my own little world. I didn't share the panic. So when other people said, "Oh my God, we have to liquid," I didn't use leverage or anything. So I just let my portfolio just do what it does. And actually, all of the positions from that point are actually up substantially. So even with that 50% decline, not everything went down 50%, obviously, especially when you hold a particular type of company like a dividend aristocrat that I specialize in. If you go to the wealthresearchgroup.com website, if you click on the top menu, you'll see special reports and dividend mania. If you go through and download the dividend mania PDFs, you'll see exactly what I love to position in. But anyways, what I did, Dave, in terms of the real estate, I used a no money down approach. And that it works until today. So in America, there are 2 million vacant homes at now, even now, 10 years after the crash. Vacant homes. So people have a home, they get divorced, the couple gets divorced, the house stays vacant for months. People get inheritance and they live half a country away. They don't bother to go to the house for months. Homes get left with back taxes issues, all that, a lot of stuff. Landlords get burned out, etc. What you do, and what you can potentially do, is find these homes by scouring the streets. Either you or get a person to do that, and there's no for sale sign on that house.
But wait, here's the thing, and I don't want to be a pain in the ass or anything, but it sounds too good to be true.
Well,
right?
it's very hard work.
Got in the stock market early, didn't sell anything, bought real estate at the low, no money down. You must now have, why are you not filming from the yacht? I mean, that sounds too good to be true. Either something else had to go wrong, or you were only investing small amounts. I mean, that means you rode the last two bubbles perfect. Do you have $100 million?
Well, no. And remember, 2001, I was 16 years old. So in 2008, I was 24.
Okay, so you did start at a very low number. Okay.
For sure.
How old are you?
I was using my babysitting money in 2001.
Wait, how old are you?
I am 34 now. Yeah. 34.
Wow.
Yeah.
That's fun.
So
at 16, yeah. Okay.
Let me
you had a good, but you didn't have any blow-ups along the way. I mean, 2009, I fell head over heel over my skis.
Well, yeah. So obviously in 2008, 2009, the stock portfolio, it goes down 30, 35%, right around in terms of dollars. But when you don't use it as consumption money, so you don't need that money to liquidate other stuff or anything, you can let it sit there and begin to build the bottom and recover. And I have other businesses, so I'm not a.
So are you worth like 10 million?
Well, we're definitely on YouTube, so we're not gonna talk about that kind of stuff. But I can tell you.
No, no one's listening. No.
Yeah.
Just.
Well, here's what's important. And what I think matters, right? Because people are here to learn opportunities, learn value, and all that kind of stuff. With regards to real estate and the no money down approach, people have to understand that we're not talking about a way to generate tens of thousands of dollars per house. It's a way to generate $3,000 to $5,000 on any particular deal and do about 1 to 2 deals a month. It's a very hard niche. If we go top to bottom on what to do. Because you have to locate that absentee owner. You have to contact him, contract the price with him, and do an assignment of contract. That is the entire model. And you can go to wealthresearchgroup.com/real estate to get exactly the strategy that I did. But in the stock market, the S&P 500 has returned about a 7.6% return year over year. For the past 100 years. It's been even less in the past 19 years since the beginning of this century. So in the markets, if you even have $100,000 to start with, it takes about 8 to 9 years to double your money every time. So definitely when somebody starts with a minimal amount and doesn't contribute to that externally from other active income, that's when you get into these catastrophic stories that you hear, in my opinion, Dave, because people are trying to compensate for lack of income, active income from their career by taking too much risk in either the forex markets or leverage bets, ETFs that do triple the price or triple the moves, etc. And I think that is not what my strategy is. My strategy is to be super conservative, super selective with 85% of my portfolio, and really put months and months of research into speculative opportunities and spread it between about 10 to 15 of them, where I have 1% of my portfolio invested in each. And, you know, even if one ends up being a very big winner, it compensates for all the other ones that you hit your stop loss after about a 25% loss, etc. But one of them becomes a very big performer for your portfolio. So, you know, it's just, and I don't know if I'm on full screen or you are on full screen. I just changed it, but you know, if I'm talking very level with you, it's important to understand that investing is really secondary. I know people love to think about it as the primary way to get wealthy. The primary way is to have skills and a career like you did, founding a company, a business, and focus on that. And secondary is that investment. But the importance of investing cannot be overstated.
I used to view it less important, like similar to you, because I was doing e-commerce, earning a lot of income. I'm like, this is the main thing. If I can just not lose it investing. But at the same time,
sure,
you know, it's so important because it builds and compounds over time. And also, if you're sort of lackluster about it, you could do something dangerous. But the other thing I've learned is that the two are very different. If you're an entrepreneur, you're starting a business, you know, or have a job, whatever, you are doing stuff every day. You got your things to do list and you're cranking, you're doing. As an investor, you're just studying and not doing, right? You bought it and
there's a lot of not doing.
You're waiting for 5 to 10 years for it to mature, you know, and it's like hard. Sometimes entrepreneurs, that's why they think they get into this day trading. It's an entrepreneur trying to squeeze entrepreneurship into investing.
Very true.
It does not end well, you know.
Never met a rich day trader. Or you know what? I did meet millionaire day traders who started as multimillionaires.
Yeah. The way to trade to $1 million is buy it at 10 and sell it when it's down. Anyways, the other thing, so I want to give you some shit about gold. I know you talk about gold on your channel. I used to own gold. Now that I've got into Bitcoin or cryptocurrency, I see that I think it's digital gold, and I think it's just better than gold. Plus, gold was destroyed by the central bank system. I did a lot of reading about the history of money in these past couple of years.
Yeah.
By having cryptocurrency, it's much easier to understand your existing system when you can compare it to another one, which I really hadn't.
That's true.
Anyways,
smart.
So gold, basically we were on the gold standard. We all love the gold standard from 1840 to 1912 or whatever it was.
Yeah.
As one of the greatest times ever financially. Have a world standard was awesome.
Yeah.
Then central banks came and has its problems, but was a bit of an improvement. The problem with gold was you always have to issue paper against it. Now maybe you could do digits, but because you can't move gold. You can't. And then if people are allowed to hold it, they eventually steal it. And then so central banks set up a system that actually made. I almost argue. A few years ago, I never would have said this, but the reality is central banks did introduce some improvements, right?
Okay.
Now we have another system that's going to replace the central bank system, or at least takes to market share. They have 100% market share. So I look at gold now as,
as
I don't
relic
think
of the
everyone's
past.
going to agree with me and it's going to zero next week by any means. But as far as the long-term potential, I don't know. Concern for gold.
Gold and silver, there's nothing magical about them. There's nothing unique about them. And they have just been, nature, the elements, in terms of the elements, they make up all of the right properties or all the right characteristics to be the best commodity-based money. Throughout the history of the world, shells have been used as money, salt, tea leaves, rice, large stones, guano, which is bat shit. I mean, anything and everything, alcohol, cows, barrels of oil. I mean, there's a lot of commodities that have been used as money, diamonds, etc. And these two have just been the best. Now, it doesn't mean that they're perfect, and it just means that historically they've been the best. And so there is a community within the gold investing community, which is termed gold bugs, which are in love with gold and silver in the same way that in the crypto community, there are a lot of people that are in love with the cryptocurrencies. So
there's a lot of Bitcoin bugs, actually, like seriously, same.
Yeah, or maximists, or there's terms for them. But the bottom line is this: the gold is a non-producing asset, and it will not make you rich in general. At times, such as in the hyperinflation in the Weimar Republic, holding gold was an incredibly good opportunity, because if you held your Deutschmarks, you lost everything, and therefore gold, by just retaining its value, was a phenomenal investment. So it has its moments, but in general, my strategy personally was to just take my lifestyle burn rate, my monthly expenses burn rate. So let's say it's $5,000, multiply it by 24, so 24 months, 2 years, which is a long recessionary period in case there is one. So that's in this example, $120,000, and convert it from fiat into physical precious metals and do nothing with it. So just if there's a huge problem, you have 2 years worth of today's money in precious metals. And that's it. That's my entire fascination with the precious metals sector. Now, another way to do it is just take about 4 to 7% of your net worth, your entire net worth, and turn it into physical gold and silver. All it does is an alternative to cash. The money, the big money with gold and silver, is when there is a raging bull market in commodities, the mining shares act as a leverage to gold and silver at times. So that would be where you can get greedy and actually make money with precious metals. So I think that's important to understand, Dave. And just to clarify this, nobody, at least in my world, is looking at as gold as the solution to everything. And there will be a time, probably, when society says, hey, we don't need gold and silver anymore, but who knows when. For 5,000 years, it hasn't been the case, but it could be. It could happen. And we'll probably be able to know this in advance and liquidate our position if that happens.
There's a really good paper on that you can find called The Bullish Case for Bitcoin by this guy, V.A. Bopati. And he sort of explains the Bitcoin versus gold. And it gets right to the point, too. It's only 8 pages. I've seen these things in large books like the Bitcoin Standard, if you want to go really down the rabbit hole. But yeah. But anyways, that's sort of that argument of, but I think this whole maximalist, that is the term, gold bugs are Bitcoin maximalists. The maximalists are, there will only be one. The ultimate Bitcoin maximalist is like, the only cryptocurrency that will matter is Bitcoin. Yeah. Meanwhile, there's thousands others. And as this one guy says, well, you maximalists, then explain to me why there's more than one token in the top 10. Like, what are those other ones? You need to explain that. So, there will be many, but gold, you say it's just a metal, but it is very special and that's so hard to recreate. Yeah. But still, some things are, I guess, by luck, right? I don't know. I'm sure there's other metals. Anyways, it's an interesting, lots of interesting economic discussions coming from the crypto revolution. So
definitely. And Dave, wrapping up this interview, where can people check out a little bit more about you? What you do with the course for teaching kids about money? Because I love that angle. I now as a father of a 2.5-year-old, I teach her. Like I let her pay at stores, take the change. I show her the different nationalities and all that kind. I want her to be financially educated, and I think kids need to learn about money as early as possible, in my opinion. Not to be greedy, but learn money, learn the concept of financial education and prudency, etc.
Right.
What's your website?
And it's just not being taught in school.
Oh no!
So you can
and in my
always
opinion,
find
deliberately. In my opinion.
Yeah. The easiest way to always find me is davelevine.com. That I'm always going to own that, and that'll point to. Currently the flavor of the month is I do stories on Instagram, and I also send it to my Facebook and stories even on my YouTube channel.
Okay.
And my name on there is davelevine.com. You can't put the .com, so it's DOTCOM.
Okay.
And I do some YouTube videos, but as far as the school, teaching kids, if you follow me on any of these things, I'll keep you up to date. The latest, I'm designing some courses now. I'm maybe teaching at the local elementary school, 5th graders for a few weeks, like
nice.
in a month or so. We'll see. It's not final, but I'm just working on finding different groups my goal is to get to the point where I have some materials that are tested and are good for, it looks like I'm looking 4th or 5th grade type of thing. But I'm open to different things. I'm working on lots of different things. And as as opportunities come, and so, if you follow me, I'll let you know the latest. I was just thinking I've designed a few courses. I might just put them up on the internet for free and get discussions going. I have ideas for teacher training programs. We'll see where it goes. I've only been focused on it for a few months. So, we're early, and I got a long-term view on this thing. My oldest is in kindergarten, so I've got time here. But there's a lot of work to do. So, so follow me there. And how do people find you?
So wealthresearchgroup.com. It's the easiest way, and for the highest priority, most up to date, best way is just to subscribe to the free newsletter. That's where we share all of our research and information. And on the website, if you go to the top menu, like I said, there's the special reports tab, which is a library of wealth, I should say, of everything all the PDFs that we ever aggregated. They're all accessible by download, and I think that is a great way to increase your financial education. So with that said, we will post this interview, this session that we did on our YouTube channel, and that's where people will check it out. And Dave, thank you very much for taking the time. It was a really eye-opening and mind-opening session, and I wish you a lot of luck